Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Wednesday, the 21st of January. And I'm starting off with Avocet Mining, where at first glance it looks as though we're a bit late on this rebound that the shares have delivered, a bear trap, double bottom bear trap rebound for December, January. But the good news here, in a way, is that we have the break through the 200-day moving average shown here in black at 6.92, and that's the end of day close stop loss on the buy argument at the moment from a technical perspective. What we've seen so far today is price action wholly at or above this feature, which is a pretty bullish sign. And providing we have no sort of sharp reversal by the end of the day, this should set the stock up for further gains. The favored destination at this point is actually quite ambitious. That would be the top of this May broadening triangle up to 12 pence over the next 2 to 4 weeks. And basically, if there is any sort of dip towards the 200-day line to improve the risk reward on this and to also cool off the overbought RSI, you would go for that in the first instance. But clearly, stop losses just below the 200-day line should be enforced quite strictly. Next up is Blur, where the shares have been smashed of late. Discuss this with Justin Waite in the ADVFN podcast the other week. So it's one of his really that he's identified. Looks like we've finally got a recovery here, also a broadening triangle situation. What I like about this at the moment is we've had an unfilled gap to the upside. Low of the day was also the top of the gap, which is encouraging. Looks like we've also sort of come back within this triangle after an overshoot below the 50p level. Best way forward now is probably to regard today's low 55 pence as the end of day close stop loss, and we will be looking for a return but possibly as high as the 70 to 80 pence zone, top of this triangle here, over the next month or two. Be cautious on the shares, maybe to wait for an end of day close above the 20-day moving average. That's currently at 60 pence, but it looks as though, especially as we've recovered this low from November at 58 pence, that shares of Blur are back in business, at least for an intermediate rally or a dead cat bounce over the near term. Finishing off with a stock which I haven't looked at before, which is Distil. And here we have quite a sort of a spiky situation, recovery attempts over the course of the autumn from around the 0.6 to 0.7 pence level. Looks like the shares are finally going to go up and stay up, in the sense that we've got the near-term moving averages all rising, break through this 50-day moving average at 0.95 pence as well. Probably that's the best end-of-day close stop loss at the moment. Just above the floor of this rising October price channel. And if we hold the 50-day line over the next few sessions, or at least by the end of the week, the top of this price channel at 1.8 could be the best case scenario target over the next month or so. If you're cautious on this situation, maybe wait for an end of day close back above this December resistance at 1.2 pence, just to make sure that there is the momentum there that we probably need to get up to the higher levels. That's it from me. More updates at masterinvestor.co.uk.